Joined by Lavan Gopaul from 28E Capital. Lavan, thanks for joining us. So we're looking at US markets, which certainly are on the front foot today. European markets have been strong. We've got central bank meetings this week in the US and Europe. And in South Africa, a bit of a muted start to the week, down by around 0.1%. So looking at quarter two and how it's panned out, I mean, what's your assessment as to the direction for the local market here and what are the key drivers of it right now?
For today's action, we probably would have seen a stronger currency hurt our market. Bear in mind, most of the South African counters are rand-related export businesses. Big mining houses, the likes of our industrial giants like South African breweries or British American Tobacco, a number of the export-related businesses taking some strain with a very strong rand. The outlook for our market in general is probably a function of the sort of earnings that our companies have been able to deliver. Unfortunately, the mining sector has been struggling along, but the rest of the market seems to have performed quite well in terms of its historic earnings as well as its forward expectations. Buoyed also by very strong performance from the US, very surprising upbeat performance in terms of earnings by a number of companies that are coming through with announcements now in the US, and I think that's going to help lift the sentiment globally as well as in South Africa.
Looking at some of the stocks which have been on the back foot today, Anglo American down 1.75%. BHP Billiton also struggling to go anywhere. 254 rand, slightly softer today. BHP Billiton continues to downsize. It continues to say, yes, we'll sell off our non-core assets. So far, in the past 12 months, they've sold off around $5 billion. What do you make of the downsized global giant from a mining perspective right now in terms of the assets it still has in that portfolio?
I think there's a strong push for BHP Billiton to show better earnings. And when you see a reduction in growth expectation from China, they're probably concerned that commodity prices are not going to keep in step with the previous performance. They'll be forced to probably become a lot more cash flush, possibly expecting further weakness in that environment and maybe looking to apply that cash to even weaker assets in time to come. For now, the action that we've seen today on Billiton and Anglos is probably a reflection of that strong currency. As the rand performed so well today, it hurt the mining stocks. Also, I think some cloud would have been over it with possible strike action and the implications of higher wages that may come in if the strike action is successful.
Of course, let's watch to see how that pans out, and it could create a bit of risk aversion around South Africa and of course have knock-on effects, currency traders are saying, to the rand. In the property space today, Redefine International's results were out. Interim HEPS per linked unit of 2 pence. They're talking about quite a resilient portfolio in light of the fact that you're looking at the European exposure there. They've of course got UK properties, and then they've got presence through Cromwell in Australia, and that really has been the star performer. What do you make of them relative to the other listed property stocks?
They've recently become a very robust property player with a strong geographical presence in different regions. It gives them substantial income with a good currency and country mix. Bear in mind their model also has got a mix of some residential but largely industrial and commercial properties. It has been a very good performer, and anyone that's held this portfolio in particular over the years would have seen handsome returns. Also a very good dividend player. Now, I know that a number of portfolios want to include Redefine in their parcel.
So would you?
Yes, I think it's something that you can recommend. The property market in South Africa has gone through quite a big bear trend, lots of foreclosures. That market's starting to show some interest from investors. At this stage, there's a very close race between new developments and buying existing property, but certainly in terms of yield for holders that have had a building for some time, you're seeing very good returns.
What's your recommended stock in this space then?
I'd go with Redefine.
International Redefine in South Africa?
No, I think Redefine South Africa has probably got better yield. Remember, our interest rates are such that we're able to show decent escalation, 10% per annum, 12% per annum, even for the larger companies, not unheard of. I think Redefine South Africa has certainly got good delivery. The international company is probably one that you could also look at holding.
What about Stefanuti in the construction space? Because they came out with their full year update today, trading update, looking at earnings down as much as 50% and saying that they're not going to put a provision in there for a potential fine by the Competition Commission. So if they had to put a provision in there, you wonder what earnings would have been. I mean, overall, is Stefanuti, which is one of the favored stocks, I mean, where does this put you in terms of them as an investment case right now?
I think that the sector has shown problems in the last 18 to 24 months. It's probably one that you want to have very little exposure to. Construction stocks in general have been battered blue and black. So for now, I think it's something that you want to steer clear of. The fact that they're not accounting for this contingent liability may not impress investors. I think you want to make sure that the worst possible case scenario is displayed. So for that particular counter, I'd probably leave it out. But building stocks in general, I don't think is something that you should be looking at right now.
And certainly we saw the market selling it off on the back of this news. The stock was down almost 4% today. Let's talk about, I suppose, because we talked about getting exposure offshore, and obviously, the likes of Richemont, British American Tobacco. There's so many options here in South Africa. But there's some gems that are not listed here, but you can get exposure through single stock futures. Yep. Let's start with a question mark gem right now, Apple. Tell us about what that SFF has been doing, and kind of why would one get exposure through South Africa, and would you be able to in fact short the stock?
Well, in terms of the JSE's new international derivatives platform, you're able to get exposure to a number of US and UK securities. The larger market caps, and that would include the likes of Google, Apple, Microsoft, etc. With a counter like Apple, you could get exposure to Apple for as little as $45 per share. You'll find most of your transactions will be in the order of exposure of about $50,000. That's probably the bite size that most traders will assist you with. In terms of these international derivatives, you're going to have a choice. You can either have this sitting as a dollar exposed instrument, or if you wish to get it converted back into rands, both facilities are available. So the currency is something that you can play with. There's a currency leg that you can add on if you so wish. The ease of transaction and the exposure means that for a small amount of cash, something like $50,000 worth, you'd put down in the order of about $5,000 or $6,000, or translated into rands, 50,000 rands, giving you exposure to 500,000 rands worth of Apple, give or take. As you see the stock go up, you'll be able to enjoy the upside benefit if you go short. If the stock falls, that's something you can also take advantage of. A number of good pair trades also coming out of it.
Yeah, talk to us about some of the options here. I mean, if you're going to be taking a view on Apple, you'd suppose be taking a view potentially, hopefully, on one of the competitors.
Well, a number of different pairs have started to come up. Samsung has been an obvious competitor for Apple, so a lot of players going long Samsung, short Apple. That pair trade's been in the market for the last few months and a very successful result. Google, Apple's also been a successful play, long Google, short Apple, particularly with Google looking to introduce a lot of technology by way of the Google Watch or the glasses. And as you compare that to Apple, that hasn't really introduced too much by way of a new offering. So those sort of transactions also available. You would be able to play any number of commodities using your international derivatives platform.
So futures options here in South Africa, of course, through the derivatives space right now. I mean, give us some ideas. Oil, gold.
All of it.
All the buzz right now.
You'd be able to get involved in futures contracts over the dollar gold price, dollar platinum price, dollar oil price. You can also use a number of South African instruments to do very much the same. Yeah. But there is a very decent spread in the US markets. You're looking at very tight doubles on oil, gold. ETFs that are available over a number of Asian markets. So you could, for example, do an ETF over Shanghai or the Indian market. The commodity space has been very buoyant. You've seen a lot of move in gold in these past 2 weeks, and that meant a number of players eyeing that gold price, waiting for the price to settle. And so an IDX or an international derivative is probably one of the ways to get in. just to remember, this doesn't touch sides with your offshore allowance. You'd be using local funds. What happens is this money doesn't leave the country. There's a funded mechanism that gives you exposure to these.
Even if you're doing that on the equities front and you're taking a dollar position on an Apple, for example.
That's correct. Even if you were to take a dollar position in Apple, it is written as a single stock futures contract and booked on SAFEX here at the Johannesburg Stock Exchange. So the funds don't leave the country, and it's your bankers that are able to orchestrate the US leg. So some nifty financing and giving you exposure to US markets. You've mentioned in particular interest rates meeting this week, a lot of central banks talking around interest rates. You could take advantage of that, playing the US 30 or 10-year notes. Certainly you could play UK interest rates, and all of them available over the big US and UK securities.
But as you say, that around minimum $50,000 is what we're looking at here.
Exposure, so your margin is probably going to be around about $5,000 or $6,000, and that's probably the sort of transaction size that you'd look at.